Hey guys, how's it going? It's Andy from Magoo Investing. Happy Wednesday. Tuesday was a pretty interesting day on the stock market. Things were pretty green all day, and then in like the last hour of the trading day, things started to sell off pretty significantly, and it's ended up snapping a 7-day win streak for the overall market. And so we had some interesting news stories. We had Tesla announce that they were going to be doing a stock split. We had some stuff with Kodak getting their loan put on hold and the stock cratered. And then we had the market leaders was actually JP Morgan, ticker symbol JPM. And if you remember, this was a stock that I talked about a couple weeks ago as being one of my favorite stocks to buy overall. In addition to Southwest, which at this point I'm up around 12% on that position that I took in that video. And with the sell-off towards the end of the day, I'm starting to slide towards being more bearish again. It seems like it's just like a roller coaster where I'm slowly getting more optimistic about the stock market, and then we start seeing a large sell-off in the tech industry, and then I'm like, maybe I'm bearish now. And so at this point, I'm just gonna kind of hold my ground. I've been saying that the stock market should crash for like 2 months at this point, so I'm going to continue to hold my ground and just kind of see what happens. But as the tech stocks have been kind of the leading factor with the market falling recently, I think it's interesting to look at some of the better deals in the stock market. If you look at the stocks that have been pulling up the market overall, stuff like Apple, Amazon, Microsoft, stuff like that, they're all up significantly in 2020. And so when I'm looking for opportunities, I'm just kind of keeping my eyes peeled for stocks that have been in the news for some poor things. And so this might sound weird to be buying these beaten down stocks, but I want to buy beaten down stocks from just one news event, not beaten down because their business is failing. So I think I found a very interesting stock that has been falling around 20% in the past 2 weeks. And I think it could be a great opportunity as being one of the best tech stocks to buy for August of 2020. Before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. With that out of the way, let's start talking about what I think is the top tech stock to buy for August of 2020. And so anytime I make one of these videos talking about a stock that I think is a good buy, I do want to say that this doesn't mean that I don't like all the other tech stocks out there. Sure, I would happily buy something like an Apple or a Microsoft, but I'm looking for stuff that is going to pay off in the long run because it's a great deal at this point. And I don't see a lot of great deals when you see the top stocks that have been pulling up the overall market. And so the stock I wanted to talk about in today's video is going to be Intel, ticker symbol INTC. And so since they released earnings towards the end of July, the stock is down 20% overall. At this point, the stock is trading for $48 and it's down 19% year to date. So it was pretty flat going into that earnings report. And I wanted to break down what happened on that day with the earnings report and why it's been falling for the past couple weeks. And from that earnings report, they actually beat expectations on the top and bottom line. They saw earnings jump 16% and revenue and sales jump 20%. So we saw some really good numbers from that overall with fantastic beats. There was news that they were going to be delaying their 7nm chip an additional 6 months. And when that happened, it pushed the stock down significantly, as it should, as that's a huge part of their business. And it let a main competitor like AMD kind of swoop in and take some of the momentum. And so as AMD released some good earnings as well, it kind of became a tug of war where if AMD was doing well, that means that Intel had to be doing poorly. And so for the past 2 weeks, Intel has been sliding constantly and AMD has been going up a lot. And so if AMD has been doing really well recently, why don't I want to buy AMD? And the reason is AMD is currently trading for $77 and it's up a whopping 68% year to date. And so while it's had an incredible track record so far in 2020, when we've been seeing the market sell off, the places that are going to be giving back a significant amount of their gains are going to be these top performing stocks that are up 40, 50, 60, or almost 70%. And so buying into AMD when I think the market could realistically fall in the next couple months, I don't think is a great opportunity. Also going with AMD, the stock has fallen 9% in the past 5 days as it seems like they're giving back some of those gains. So I've talked about some good things from the earnings report with Intel, and I've talked about some of the bad news with the delaying of their 7nm chip. So I wanted to talk about why I think Intel could be a great buy in August of 2020. And I'm going to be breaking it down into 3 main sections. The first one is going to be the track record of the company. The second is going to be technical analysis, where we're going to hop on the computers, and I'm going to show you what I see on the charts that looks very attractive to me. This was something that was the main driving force behind why I took a position in Southwest, and as I mentioned, I'm up double digits already. And so technical analysis is my favorite way of trading, and that's going to be a huge weight for why I may decide to buy the stock. And then the third and final reason is going to be the dividend, which I think is very attractive. And I'll explain some of the numbers behind that dividend when we get there. And so looking at Intel and the very crowded semiconductor space, I think it's really interesting to compare how high of a volume of sales Intel has compared to the overall market. And so in 2020, Intel is expected to bring in $75 billion of revenue. And when you put that into perspective, that's going to end up being around 17% of the overall sales in semiconductors with all of the companies out there. And when you compare that to something like AMD, which has been killing it recently, I was very surprised to see that AMD sales are only going to account for around 2% of semi sales overall. And what that tells me is even if the 7nm chip is delayed significantly, they have enough sales overall where I'm not super worried about it. Obviously, it's going to be a worrying trend if the company continues to be lagging behind, but the historical data of being a top seller when it comes to these semiconductors makes me feel very good for a long-term investment. In my Sonos video, I got a lot of people asking why I don't take stuff like PE ratio into account. And so PE ratio is a great way to kind of look at the historical trend of a stock being a potentially good buy. However, in the comments, I responded that for a lot of these tech stocks that are very speculative and move significantly, PE ratio doesn't really tell you anything. PE ratio is great when you're trying to compare the historical average of a company, but when you have a stock like Sonos that has moved significantly in the past 6 months, it doesn't really tell you a lot. But for a company like Intel or a lot of these blue chips, I think PE is a great way to determine if you're getting a stock at a good deal. And so with the expected earnings and the current price that Intel is at right now, there's going to be a PE ratio of around 9. And when you look at the historical averages since 2013, it's mainly been sitting between 11 and 15. And so what that tells me is this is a pretty solid opportunity. PE ratio being the ratio of the price of the stock compared to their earnings. If the company was struggling overall and the price dropped and their earnings drop, it would continue to have a very similar PE ratio because they're being balanced out. And so what having a low PE ratio means is the stock is very cheap compared to the level of earnings that they're bringing in. And so this tells me that Intel could be a good deal based off of the historical data of the PE ratio. On the 5-year chart, you can see how significant the sell-off has been in the past couple weeks. However, I'm going to go deeper into these charts when I get to the technical analysis portion of this analysis. One of the really attractive parts of Intel comes from their operating margin. Margin is a great way to determine how efficient a company is at turning revenue into profit. And currently, Intel has an incredibly high margin of 33%, which is 96th percentile out of the more than 200 semi-stocks that you can buy overall. And so that's very attractive to me. In past videos, I've talked about the places that companies can put free cash flow. And that's stuff like savings, dividends, stock buybacks, or research and development. And for a company that I want to be investing in for a long-term position, I think investing in their future with R&D is very attractive. And so far, Intel has been one of the top stocks when it comes to investing into their future, putting more than $13 billion into their research and development annually. When you compare this to the overall stock market and these massive companies, this is actually the 5th highest overall, above massive companies like Microsoft. Stuff like Amazon is going to be the top dog, but the fact that Intel is 5th on that shows me that the company is investing in their future and is very attractive for a long-term investment. So overall, for this analysis, I think Intel is a great opportunity based off of its significant discount that we're seeing. It's a company that has a track record of fantastic gains, and this drop that we're seeing is bringing it back to the pandemic lows, which could be a great opportunity. Also, Intel invests in themselves heavily, being the 5th highest when it comes to money invested into research and development. And for a long-term investment, all of those factors make me feel very bullish on Intel overall. Also, the fact that they dropped significantly from that news, which I think was kind of blown out of proportions, makes me feel pretty good overall. And so the second part of this video is going to be technical analysis. So let's head on over to the computer and I'll talk about what I see on the charts. All right, so here we are in my favorite part of investing, and that's looking at the charts. In my opinion, this is where the money is really made. Sure, I have a good time looking at, revenue charts and looking at the news stories that push a stock up or down, but looking at the charts is where I really enjoy it. And Intel is a very interesting story. If we go back, we can see that the stock has a fantastic track record. But when we come to the 5-year chart, this is where we start seeing some interesting stuff. So this was not something I actually picked out on my own. I had to read an article where someone talked about this long-term trend. Normally I'm looking for horizontal supports and resistances, and someone mentioned this. And when I look at it, it's actually really interesting. So it goes all the way back to 2016, and it's just this nice upward trend. And the stock was able to hold above that when the market fell back in March. This is the bottom on the 23rd. And we're getting pretty close to it again. I think it's really important when you look at the charts to come up with an area where you want to buy, an area where you want to sell for a profit, or where you want to sell for a loss. And so at this point, I think realistically the stock could come down to the pandemic lows. At this point, the upward trend looks very nice. And so if I was thinking about buying in, which I am, if I go to a shorter term, I'll go to the 180-day chart, we're getting towards the end of that, and it appears to be respecting that upward trend. So at this point, the $47 mark could look like a great entry, but I have the alert set for the $45 mark just because I think that could be a fantastic opportunity. And so let's talk about some of the risk reward, because that's something you see mentioned a lot. And the reason why I like buying these beaten down stocks is you are very close to some serious support. So say you bought in at the $47 mark like I just talked about. If the stock goes up and fills the gap, which is an important thing, this isn't even actually going to fill the gap. The gap goes all the way to the top. But if it comes down to what I think could be a solid resistance, that would be a gain of 21%. And so say I enter, things go poorly, and it goes down to the support, breaks through it, that's going to be a loss of 7%. So that's almost a 3-to-1 profit loss, and that looks fantastic to me, especially when the market is so overextended. So I see a lot of positives when it comes to Intel. I'm not sure if I'm going to be waiting for the 45 or if I'm going to make sure that I enter this trade if it goes down to 47 in the next couple days, but I will set that alert. We'll go to the 47.50 if it goes at or below. This is something I'm just going to play by ear, see what happens with the overall market, and I see some great opportunities when it comes to this stock. All right, the third section of this video is going to be talking about the dividend. And so when a stock falls significantly, it's going to be boosting the yield of the dividend. At this point, Intel is paying a 33% dividend quarterly, which ends up being a dividend yield of around 2.8%, which is very solid. Sure, I've talked on this channel about some 12% dividends, but you know the problem with that? Yeah, they had to cut their dividend because it became too high when the stock fell. And so when I look at the stability of a dividend, one of the main areas that I look at is the payout ratio, which is a number that shows the percentage of earnings that are paid out to the investor in form of a dividend. And so on this channel, normally my cutoff has been around 75%, because the higher that is, the more likely the dividend is going to have to be cut if you have some problems with the company. However, when you look at Intel, it's below 25%, so this is a very safe dividend overall. And so with that cash flow, they brought in $22 billion of free cash flow in 2019, and $5.6 billion of it was spent on dividends. And then you had 13 that was going to research and development. And so this seems very healthy overall. They're investing in their future, they're paying money back to the shareholders in the form of dividends in a very safe and sustainable way. And so when I see this dividend, it's not something that's going to make you a significant amount of money on its own. But the fact that the company is at a great discount, you're getting a dividend yield of 2.8%, it has a low payout ratio, and has a history of increasing that dividend, I see a lot of positives when it comes to Intel overall. So overall, I think Intel could be a great opportunity. When I look at the broader market, I don't see a lot of great opportunities when it comes to tech stocks. I've talked about companies like Zynga and Sonos, which I'm heavily invested in at this point. But when I think about blue chip stocks, there haven't been a lot of these top tech stocks that have been at a discount that's worth buying. And I think Intel could be a great opportunity with the 3 reasons that I talked about in this video. So sure, the company could continue to fall, but I think that's why it's important to chart out some of these areas where if it falls through the support, I may consider leaving this trade. And so I'm going to wait to see what happens with these recent supports and the upward trend that's been going since 2016. And if those supports end up holding, I think this could be a great opportunity, and I will likely enter this trade if the stock falls down to that area that I charted. So very curious to see what you guys have to say about Intel overall, and I'm very curious what stocks you guys would like me to talk about in future episodes. Let me know in the comment section down below. Thanks for watching this video. I appreciate all the support, and I will see you on Friday.